Good morning and thanks for tuning in. NIO held steady in the after-hours following Wednesday's close at $4.62, showing no signs of immediate follow-through or additional volatility as we head into Thursday's session. This quiet market action isn't cause for alarm. It's exactly the kind of backdrop where strategic developments and execution take center stage. And fortunately, that's where today's story gets interesting. No fresh headlines? No problem. Because in places like NIO, what matters most is what they're actually doing, not just what's in the news. Today's angle is all about NIO being in execution mode. The mass market shift is real, cost discipline is becoming tangible, and while profitability remains in the future, the roadmap is clearer than ever. Over recent videos, we've been watching for signs of that elusive $5 breakout, only to get pushed back amid macro-driven turbulence and sector-wide volatility. But beneath the surface, we've also been tracking NIO's expanding infrastructure, battery swap rollouts, improved delivery cadence, and plans for the Onvo L90, a move into more affordable segments. These structural themes aren't just noise, they're the foundation of the company's transformation. NIO is doubling down on its multi-brand matrix, premium NIO, mid-market Onvo, and the entry-level Firefly. That's no minor pivot, it's a full-blown strategy for deeper market reach. These brands now account for over 40% of monthly sales, a significant shift for a company long seen as premium-focused. The Onvo brand, launched in 2024, already has vehicles like the L60 on the road. Onvo L90 deliveries begin August 1st, and packaging it with NIO's proprietary battery-as-a-service model and rapid swap infrastructure gives it a tactical edge. This is mass-market appeal plus tech advantage, a rare combination. However, NIO is still unprofitable. In Q1, the net loss widened to 6.8 billion yuan, roughly $930 million, despite a 19% rise in revenue. Gross margins improved year-over-year but fell from the previous quarter's highs. That said, the company is taking steps to right the ship structurally. They're targeting adjusted operating profitability by Q4 2025, aiming to cut operating expenses to under 10% of revenue, down from around 24%. Full-year profitability isn't expected until 2029. This isn't fluff, it's internal cost restructuring, integrating Onvo and Firefly under the core operations, consolidating management roles, and trimming overhead. It's not an easy game. Beijing's aggressive crackdown on price wars limits NIO's flexibility on promotions, something budget brands often rely on. Margins for Onvo are expected to be lower, around 15% versus the flagship NIO brand's 20% in 2025, but with volumes, that can add up. By 2025, the company projects delivering over 440,000 vehicles across its three-brand portfolio, nearly doubling 2024 volumes. These moves speak to a high-risk, high-reward design, volume from mass market offsetting a lower margin to build path to scale, while preserving its tech moat through battery swap infrastructure. On the charts, holding $4.62 after hours on a muted day could suggest that any post-pullback profit-taking is exhausted, or that buyers are quietly stepping in. Today's pre-market reaction will hinge on whether that level holds or dips into the $4.50 to $4.60 range again. The technical map remains, a support zone at $4.50 to $4.55, a near-term target of $4.80, and a psychological breakout target at $5. Sector sentiment from peers like XPeng and Li Auto may still sway the trade. If those names strengthen on deliveries or momentum, NIO could benefit from a rising tide. Heading into Thursday, the key takeaway is execution over headlines. There may be no flashy news, but the company's mass market reach and cost control efforts are in motion. The rollout of Onvo and Firefly, the timely L90 launch, and integrated operations all point toward a company actively scaling. The profitability path, while not immediate, is visible and backed by specific milestones. And NIO's battery swap network continues to provide a competitive advantage that could prove stickier than fast-charging alternatives. So as we open Thursday's session, NIO remains in execution mode. The stock might be taking a breather, but under the surface, the company is making moves in its product portfolio and cost structure that matter for the long term. If you're strategy-oriented like me, today is intriguing, not for what happened, but for what it represents. The next few weeks could tell us whether NIO can convert mass market rollout and cost discipline into positive sentiment, and eventually, price action. Drop your thoughts in the comments. Is NIO building credibility day by day, or is the path to profitability and breakout still too fragile right now? Hit the like button if you found this useful, Subscribe for more daily breakdowns reflecting both fundamental and technical context, and I'll see you in the next update. Take care.